Thank you for joining us at Taking Flight Towards a Venture-Driven Capital Market. Today's panel discussion focuses on capital raising in Singapore, including the capital markets landscape, the funding options available for SMEs, and what it takes to encourage a more venture-driven mindset within the entrepreneurial and investing community.
A couple of things I think in terms of the valuation and etc. Obviously coming from our standpoint, you want to get the best bang for your buck at the point of exit. And in terms of, for most exchanges, when you look at them, first thing on valuation, look at PEs and etc. Which exchange offer a higher PE and etc. You know, when you talk about you want to list, you want to exit. There's obviously a right time, right place. Currently, there's a lot of money flushed with money. Therefore, trade sale seems to be the flavor now. The occurrence is a lot higher than IPOs, right, on listings. But obviously, from a listing standpoint, we have also done studies and look across in terms of benchmarking. The STI broad market, we consistently trade above the regional market and some of the US markets as well. All right. If you look at the MSCI, using that Asia ex-Japan as a bench for the region, we've consistently traded higher. So that's just one data point for you. Specifically in terms of the sectors, healthcare, easily you have a range of 30-40 times. And then for some of the tech companies and etc., 15 to 20 times on average. Some are obviously higher on that, in terms of hitting the 30s and etc. Now, how people use our platform, basically we're here to offer choices. We're very happy to be in partnership with CapBridge, engaging at an early stage of the process. And in terms of the listing side of things, just want to give you an example of how some of the companies have used our platform. Wanted to raise the example of the cloud, listed in 2012, right? It was on a catalyst because SGX offer two platforms. One is the main board and one is the catalyst. Catalyst is targeted at high growth companies. You do not need a profit track record to list. That's number one. And in terms of fundraising flexibility, it's a lot higher compared to the main board. The thresholds are higher. So it's catered towards this particular group of listing companies. Now, coming back to the cloud, how they have used the platform. They listed as a catalyst company in 2012. Throughout their journey until now, their market cap have pretty much doubled. They raised to the tune of 7 to 8 million at the point of IPO, but post-IPO, they raised double that amount of money, and they've done 16 acquisitions, paying either through stock, pure cash, or stock and cash, combination of that. Just to give you a flavor, obviously once you list, the number of shares is your currency to a certain extent. If you have good fundamentals and all that, you can use that platform to your advantage. Now, they have got an interesting part with it. They have one of the spin-off companies is listed on the main board. So that's how they have been using the platform in terms of an exit. And you do not, in a trade sale, you typically, the sale is, a larger stake of the company or in most cases, 100%. In the case of a listing, you can choose to raise funds at the right time and you're arguably greater control at the right time, at the right price. You can pull the trigger.
So when you look at venture exits or liquidity events, and this is sort of venture capital funds being able to sell their investments and realize the gains, it really boils down to two distinct alternatives, right? One is a trade sale where you sell the company to a large strategic player who wants to get into the industry and you basically sell out. The other is through an IPO. And if you looked at sizable exits, right? I'm not saying there are no IPOs and all that, but if you look at sizable exits in the last, say, 5 years, which is really this new wave of venture as we see it, right? So venture as we see it today is about 5 years ago, started about 5-6 years ago. And we have seen trade sales. There have been fairly sizable trade sales, but we haven't really seen IPOs. Why is that, right? I think one is an understanding of the capital markets around the stock, especially in this part of the world. A lot of the VCs believe that the only market that does provide the type of returns that they get to, and I'll talk about returns in a while, is a listing in the NASDAQ. More recently, we've been seeing a sprinkling of companies going down south to ASX. That forms that. So it really boils down to valuation, I think. And you know, companies have a choice, and investors have a choice, and that choice is really: do I hold on to the investment a little longer? Am I able to get higher valuations by staying private? And if the answer is yes, because there's a lot of venture capital money pouring in, then I'll stay private, right? So you see the likes of Garena raising 100-something million at 1.3 billion, I think was the number, valuation, right? How do you deal with the exits there, right? Is there a viable market in the region that they could possibly do a $500 million issue at a $2 billion valuation? Those are the challenges I think that we are faced with. And I don't think it's a lack of liquidity in the market. I think it's more a lack of understanding from the investors that are looking in this part of the world. And certainly I'm quite excited about CapBridge as a platform that provides some of that liquidity, right? So funds can then say, hey, it's time for me to get out because my fund is coming towards the end of its fund life. And if another fund is willing to take over at a suitable valuation, I can sell, then negotiate a contract on a platform such as CapBridge. So it does help, but ultimately investors will need to eventually be able to get out, because by definition, as venture capital funds, by definition as private equity funds, we're not long-term investors. We don't stay invested in a company, right? We invest, we help grow the company to a certain extent, and then we still look for an exit. So I think the challenge that we're faced with today still boils down to valuation, whether or not the markets can recognize it.
I think more importantly, I think Venture Hub is really to facilitate the link up of venture firms and the startups. So what we do is we try to leverage off our connectivity across the world. Different parts of, for example, like the gateways in China, the gateway in San Jose, in Luxembourg, in even down under. Right? So we look at the startups and help them to come to Singapore to set our hub here because of our positive attributes that Singapore has as a hub. And because the mere fact that setting up a venture hub here, right, in Singapore is a stamp of I would say approval, of Singapore as a hub in Asia to bring the startups in and out. So it's inbound and outbound. So I think that is a very important plan that we have for the startup ecosystem here.
Venture as an asset class it continues to be a good asset class to invest in. Cambridge Associate has this data point where the US venture firms realize an IRR of about 22% annually. Now, if there was a way to recognize this, if there was a way to make that happen here, I think that is something that we try and do. So I think to answer your question, I think that's one of our vision. How we do it is nothing short of trying to create this platform, and the online side is just one aspect. There's also the offline side, where we are looking at curating early mid-stage pre-IPO companies, and we try and find or curate these companies that has good technology, and they tend to be not just a Singapore company, they tend to be also US global companies. But again, having the right set of parameters to know who has invested in them. Were they invested by TPG? Are they invested by NEA or Kane? If you can take comfort and know that these other guys have put money new money in a price term sheet, you can rely on that. The question has always been, most of us have no access to that kind of deal flow. Right? Why would they share? And through our partners in the US, we have a team in Chicago, and we also have a team here in Singapore. We are now able to put these deals together. Right? Now, the implication of that is not just about bringing these world-class companies here. Is the fact that our companies here can learn from them by exposing these companies to our ecosystem here. not just for fundraising or a trade sale or potentially an IPO, is to allow our companies to also get exposure to the investors on the other side of the world, right? So not only are we working hard at bringing these kind of deal flow, we are also bringing these investors here, right, to play here. So to answer that, the big question, and I know there are many Lao Jiao seasoned venture guys here, they said that's not going to happen, okay? A company with no E, how to list, right? And that, I think for many years we've been asking that question, how do you fix this? So one of the things that we are trying to address is to kickstart or to fire up that, that kind of a marketplace where, my view, this potentially can be a NASDAQ-like market. But it requires participation from the big boys. It requires participation and curation of companies here, right? So that platform is a global platform. It operates 24/7. It's only meant for institutional and accredited investors, guys like us. Right? It was created for guys like us. And in a sense, that's how it works. And right now, we have a good, healthy pipeline of companies that we are helping, and by working with other partners like PwC, the hope there is that we can curate more local companies that could have that global outlook.
I think in terms of SGX, we are very happy to engage earlier on in this process. Now, there's a lot of stuff that we do in terms of engaging with our companies that are listed. What we do in terms of, there are on several fronts. In terms of the investors, we do target them, we do profile our companies. We organize a lot of events to profile the companies, to help them match up with the right type of investors, right? So typically we will partner with the broker community, bring in the right investors for them, and then let them have an opportunity to interact, to get to know the company. That's one, on the partnership with the brokers. We have also organized a lot of retail events as well in conjunction with that. Some of you may be quite familiar. We have an academy where we run courses. We'll invite to talk about specialty, for instance, in some of the things that we have currently run, the mineral oil and gas, quite specialized. We have run courses on that to help investors explain. In the technology space, we have also done similar seminars and etc. In terms of generating the sort of information flow and the knowledge to help investors appreciate them better. So I think over time, investors will get a much better sense and appreciation of the companies, especially the ones that you guys are looking to exit.
Thank you for tuning into our panel discussion segment. We look forward to sharing more at our next initiative. Till then,